almost like the Flashpoint, where it starts, one of the key matrix lines that will help shatter this statist centralized system.
Good evening, ladies and gentlemen. I am Jay-Z, and this is Flashpoint Radio. It is Friday, and that means finance and economics. We're going to focus on some stories dealing with domestic and international finance, the stock market, the Eurozone crisis, and a bunch of other topics. We will start this evening in Europe with the Prime Minister of Italy, the appointed technocratic Prime Minister Mario Monti. From The Guardian, this is yesterday's news. Mario Monti, we have a week to save the Eurozone. Italian Prime Minister warns there is no room for failure in talks between single currencies, big four countries. Yes, you have this article from today. Reuters, Euro's big four seek way out of crisis in Rome. The leaders of Germany, France, Italy, and Spain tried to find common ground in Rome today to restore confidence in the Eurozone ahead of a full EU summit next week. So, the entire European Union is gathering next week for an economic and political summit. And, well, the four largest economies and those with the most power decided to meet today to discuss what was possible. A Eurobond, whereas they created a new financial instrument out of thin air, basically, and sold the promise of financial stability in the future to people. Good luck selling that one. Or monetary easing by the current central banks there. I was reading this article about Mario Monti, who, by the way, came from Goldman Sachs, was installed because of issues there. And, well, he was popular when he went in, but his popularity is waning. He has brought in austerity and raised taxes, which when you cut services and raise taxes, well, you've got a disaster waiting to happen. But his warning is this, quote, a large part of Europe would find itself having to continue to put up with very high interest rates that would then impact on the states and also indirectly on firms. This is the direct opposite of what is needed for economic growth. The operative part of that quote is indirectly on firms. That is the final part. The first was the state, then comes the firms. The leaders, the technocrats, those calling the shots in Europe care about the firms, the financial firms. They do not care about the people. They do not care about the sovereign governments. They care about nothing except their profits. They feel that without giant financial institutions, the economy will not work. Without government, and centrally planned government at that, directing the economy, no one would ever buy or sell anything, and prosperity could never grow. There's nothing further from the truth. But you see, when you get someone that comes from Goldman Sachs, you put him in power, he's going to do whatever benefits Goldman Sachs. And, well, how did the markets react today to the meeting with the four? From the street, stocks rebound as Eurozone fears ease. The major U.S. equity averages finished with solid gains Friday after the European Central Bank pursued measures to boost banks on the continent, and a growth package was put forth at a mini European summit in Rome. They're going to accept less than quality collateral for loans. I'm not an economic expert, but that doesn't sound like a good thing. And they said that the news provided a measure of relief for investors, still digesting statements from U.S. central bank officials earlier in the day that the Federal Reserve is unlikely to pursue any aggressive measures to stimulate the economy anytime soon. So, Monti throws out a quote like, we have a week to save it. They do a little bit. It bumps up the stock market, bumps up the financials. It's called a pump and dump. This is how they do it. They move the markets. They make the money. You're not trading. You're sitting back while your dollar bills are devaluing. But did the Federal Reserve really say what they just said? They're not going to do anything? That's funny that this article comes to us from the Wall Street Journal, Money Week Ahead. Money funds to capitalize on Operation Twist Extension. On Wednesday, the Federal Reserve decided to expand its Operation Twist stimulus program, whereby it sells short-term treasuries to fund purchases of longer-dated ones. Sells U.S. treasuries to buy other U.S. treasuries. To the layman, Jay-Z here, that sounds like borrowing money to borrow money, or paying a credit card with another credit card, something similar to that. Remember, if it doesn't work in your family, it won't work for the global economy. And yesterday, we had Moody's come out and downgrade 15 of the world's largest banks. They got financial downgrades. And what happened? Well, today, shares of 12 of the firms affected by yesterday's actions rose. From Bloomberg, bank investors dismissed Moody's cuts as years too late. So since they didn't do it years ago, they said, pshaw, this is a good thing. So they decided to buy. From the Motley Fool, Fool.com, Dow edges higher with help of downgraded financials. So it appears that since the financial sector got downgraded, their value went up. Which might be true considering we need some sort of crash. We need interest rates to go up. Things need to become sane and reality needs to kick in economically. And maybe that's what it is. The downgrade, what everyone knew should happen, happened. And that gave some sort of confidence going forward. I don't think so. I think this is all insider trading, insider baseball that's making investment firms and hedge funds a lot of money, while your pensions are still invested in derivatives and things that will crash when the global economy goes down. So Monti, we have a week. They acted, stocks rise, and everything's fine, right? Well, from the New York Times, on vacation and sick, a court says take another. One reason the economy might be doing pretty bad in Europe is things like this. For most Europeans, almost nothing is more prized than their 4 to 6 weeks of guaranteed annual vacation leave. No matter what job you have, you are guaranteed 4 to 6 weeks. And now, European courts, Eurozone courts, have ruled if you get sick on your vacation, you don't have to go back to work. You still get off, but then your job has to give you more vacation to make up for it. Wow. Wow. And the ruling applies across the European Union of 27 countries. This is centrally planned global government. Sovereign nations have no say. Not only do sovereign nations, but businesses have no say about how they run their business. No, it comes from a European court. And if things are so good in Europe, if things are on the way up, if they've staved off emergencies, hasn't it may it already have hit from DailyMail.com? Starving Greeks queue for food in their thousands as debt-racked country finally forms a coalition government. But how long will it last? Yes, they formed a coalition government after the election over the weekend, which the pro-bailout parties won. So they are getting ready to sell out the people of Greece and put the debt firmly and legally on their shoulders. And thousands are lining up for free government food. Well, that's a signpost on the way to hell. You better believe it. So, no, I don't think things are getting better by any means. Things are getting horrendously worse in Europe, and they just don't care. There's an echelon above everyone else where their news is their news, and everything else doesn't matter. As long as they can do what they need to do, go to their parties, live their lifestyle, everything's fine. Everything's fine. But, standing in line for government food, the money changers will say, at least the government's giving you food. We'll move to this country, the United States, and Nancy Pelosi, someone who we just love to listen to talk. From the WashingtonExaminer.com, Pelosi, Obama should unilaterally eliminate the debt ceiling. Nancy Pelosi said Barack Obama should declare the debt ceiling for the United States government unconstitutional, opening it up for unlimited debt for spending, because spending is the only way to spur the economy. We all know that. Keynes said it, and John Maynard Keynes is a god to these people, as is Marx and Darwin and all of the other probably literally insane people. Another signpost, another story from the Washington Examiner. Economic bummer. 6.9 million homes ditch cable TV. That's a good sign. 6.9 million homes ditching cable TV. Some say it's because of cost. Some say it's because of the internet TV and other forms of entertainment. I don't really care. I think it's a good thing. But watch out for a bailout for the cable industry. Because when the cable and satellite company can't make enough money, they'll go running to the government with their hands out saying, we need some, please. Can I have another? Just look for it. And two more stories that just make you mad and then bring you back to reality. From FoxNews.com, taxpayer calculator. Indian reality show California wine tours backed by USDA funds. Senator Tom Coburn out of Oklahoma, who's great on exposing government waste, came out with one of his new reports highlighting programs to foster debate over the role of government in promoting private market goods. Things like funding an Indian, not Indiana, not American Indian, but Indian, the country, reality TV show. We've got the California Wine Institute, $60 million to conduct wine tours, marketing, and other events. $28 million for Blue Diamond Nuts. Cotton Council International, $20 million to promote stuff. This is just your tax dollars at work. These are companies. Blue Diamond Growers sold $709 million worth of nuts in 2009. So why have they gotten $28 million since 99? Do they need help marketing their product? Why is the government picking and choosing winners? Why are they deciding who makes money in this economy? It's ridiculous. Our government has lost its mind long ago. They aren't working for you, neither side. Neither side will cede power back to the people. They will just take the power the other side gained while they were in power and use it stealthily, growing the size of government forever, Tom Coburn included. Finally, FoxNews.com, financially strapped Nevada City declared disaster. North Las Vegas has declared financial disaster, and that allows them to avoid paying scheduled salary increases and to suspend union contracts. The unions are up in arms saying that this is just union-busting tactics, and the police decided to say, we're broke, and we can't keep you safe anymore. Yeah, that's very good. Very, very good. And the best part about it, this financially strapped city has one of the highest tax rates in all of southern Nevada. So how's that for your high taxes saves the economy? It doesn't. Because when you raise the people's taxes, they won't work. They just won't. Because the more money you take out of their paycheck, the less they're going to work for that paycheck. Things are getting bad. Europe's collapsing. Investors will flee to the United States, giving us a temporary boost. But this will eventually all fall down because it is a house of cards. That didn't fall in 2008. That was just the top layer of the cards. The big cards will fall, and everything will come down with it. So prepare yourself. Food, gold, silver, guns and ammo, purified water. That's my advice to you. Jay-Z signing off for the week. God bless. Keep your eyes to the sky. I will see you next week.